It's already gone. It's impossible. I just said it. It happens. Maybe it's when I push the recording button. Is that what you think it was?
Oh, yeah.
Yeah. Because you push to record, I did. Let's make it at least feel cooler. It won't be cooler, but it'll feel cooler. Anything? You guys still see the board? I don't have to look at changes, sometimes it does, no. But sometimes I get air to go. Room is 76, it's 74, maybe we'll get a couple of degrees. Set it to 74. Okay. So what are we going to do? Want to work the first quiz? Work the chapter 3 and 4 quiz? Both? Start with 3 and 4. Do those. All right, sure. You guys got a copy of it? Probably. Got it on her phone. That's good. Technology, wonderful. When it works, yeah. Or when you know how to work it, in my case. Yeah, got it. Okay, anyway. All right, let's do it, huh? Want to start with the first one? This is just like one of the other quizzes, except there are opening balances. So big deal. There's opening balances. We'll work from the beginning down to the end. That's all we're going to do. Same concept. It's just the numbers get a little more confusing because there's opening balances. That's all. Okay, so you know, I'd look at a problem like this. Say, okay, here's Ernst. There's Young. Not clever. Ernst Young is big force we give them. Yeah, anyway. And here's their accounts, and we can see. Okay, yeah, this is accounting equation. Balance sheet, income statement, right? Contribute capital. I've seen this stuff before. So we do this, right? Each one of them, not for both of them. I would do this if I were you guys. Except now we're doing 2 years. I can see that there are 2 years there, right? 3 columns, and it tells me there are 2 years. So what I would do is I would do both years like this. So I've got year 1, year 2, 2012, this one. Now, notice 2012 comes first in 2011. That's how financial statements typically are, the most recent information. So be careful. The beginning balance is 11, not 12, right? The ending balance is 12. Or that, and sometimes in these problems, I don't know why, they switch them and put them the other way. First year first and then the second. So if I use somebody else's problem, I wrote this one, so I did it like a financial statement did. If I use somebody else's, it might be reversed. Relax. Just read. Be careful, right? Okay, anyway, so what we've got is 2011 and 2012. We're going to have to do both of them. Aren't we still going to have contributed capital and retained earnings, of course, because every company does. Actually, sole proprietorships and partnerships, I don't remember what kind of account for those later class. So I'm going to have beginning and ending balances. What do you think? Going across. Everybody good with that? So I'm kind of set up here. I'll get work. Let's write down everything we know, solve what we don't. Okay? So what do you know on at December 31st, 2011? What do you got? Oh, what happened? Well, the one I've got, is yours print right? Yeah, mine didn't, but I could find it. Okay, the formatting was crazy. Okay, so what do you know at 2011? Okay, liabilities are 330. Okay, so we got that. Boy, these columns really are all screwed up. Just read them to me. Okay, liabilities at the beginning are 330, everybody? Is that right? Okay. What else do we know? At the beginning. Okay. I can already do equity. What's equity? It's got to be 470. 370. Well, I already missed the problem. Good job. 370. Okay, good. That sounds better. Okay, what else do we know?
When you said beginning, are you just meaning like 2009?
Yeah. End of 2011, beginning of 2012. Got it. Don't you love the way I answer questions? Really mean and then, yeah, sorry. All right, so what else? What do you know? Give me all the numbers. Let's put them all in there.
That's all for the beginning.
Oh, no, give me the ending. Give me the revenues. Give me the expenses. Whole thing.
Well, you're talking about 2012 now.
Yeah.
Okay. Retained earnings is 150,000.
That would be ending, right, guys?
Yeah.
Is it a debit or credit? It's a credit unless it's a deficit. Definitely it would be a debit, huh? Right? You know, good. Okay, what else do we know?
We know assets are 600,000.
Okay, at the end of the year. Good. Beginning. End of the second year. Yeah, we're doing really the second year. Okay, what else?
Revenues are 400,000.
But that's really 2012, isn't it? Did I show you anything for 2011? Those would be 2012 revenues,
Yeah.
right? Yeah. Did I show you anything for 2011? No. So we don't really have to worry about 2011. We're just working on 1 year. We just made this much easier. Oh, that's kind of cool, huh? 2012, right? We don't have to worry about 2011. We're doing this year, beginning to the end. If I wanted to give you 2 years, I'd have to give you 3 balance sheets. Right? If I didn't give you 2 income statements, I'd have to. Okay, now, so what do we have for revenues, you said?
400,000.
Do we have expenses?
We do, but we don't know what to do.
Oh, okay. Do we know net income?
No.
No. Know anything else? Is that every single number that we were given?
We also have dividends, contributed capital, and then
Oh, all right. So dividends are how much?
10,000.
And is that a debit or a credit retainer? That's a debit. 10? Good. All right, that's the dividend. And then you say you knew no contributed capital?
Yeah.
Now, is that a beginning or ending balance in contributed capital, or is that how much they contributed? If it just shows one number, not 2 balances, what do you think it probably is? It's probably what got contributed, huh, during the period. How much was it?
100,000.
And that's going to be a credit, isn't it? You know, debit cash, maybe, debit building plan, whatever it is. Credit contributed capital, right? Good. All right. So that's your contributed capital. Do we know anything else? Oh, wait a minute. You just told me contributed capital.
There is contributed capital and owner investment.
Ah, what do you think the owner's investment is? I think that's the contribution for the year. That's 50?
Yeah.
And then is that beginning or ending contributed capital? Which column is it in?
That's me. Contributed capital
Is 150?
is just 100.
100. Okay. So we know that. What we don't know is the beginning. Is that blank on the beginning contributed capital? Yeah, there you go. Is there anything else we know?
100K is how much all is getting, and 50 is just like.
How much they added this year? The owner investment this year. Make sense? It's kind of what it says, isn't it? You know the problem? The investment is just in one column. That's what came in. The contributed capital is the beginning and ending balance of contributed capital, isn't it? And what do you do to contribute capital? Well, you can contribute more, or you could take some out. Wait a minute. You could take some out. Okay. Not that very often. All right. Well, good. So, did you solve anything? We already solved that one. Could have done that one, right? But what else could you solve?
So contributed capital in the beginning.
You bet.
December 31st, 2011.
Last year. So how much is that?
It's 50.
So I got that number. I got another one solved. That's one of the answers to it. Do you do anything else?
You can get the net income for
You sure?
because of dividend.
I know the dividend, I know the ending. But I don't know the beginning and I don't know the net income.
You can get retained earnings for 2011. So.
Oh,
thinking
yes,
way ahead.
okay, yeah, you're thinking ahead. Good man. Okay, so what do we do? I know contributed capital is 50.
Yeah.
What's that total equity?
Total equity is 370.
370. Everybody see it?
Yep.
Equity is 370 up here. Contributed capital is 50. So what must retained earnings be?
320.
It's got to be 320. Ah, we got made, don't we, guys? There's another answer. Beginning retained earnings is 320, isn't it? Now what must have happened? Retained earnings went down from 320 to 150, but we paid a dividend of 10, which would have made it what, 310? So what else happened?
Almost 20.
The contributed capital was 50. Are you just counting 1 to 50? You're not counting.
No, the beginning had to be 50.
Okay.
We know the ending is 100.
Yeah.
We know we added 50. What was the beginning? 100 less 50 is 50. Got it? You're there. Okay, good. All right, and we're going to do the same thing here. Beginning retained earnings is 320, endings 150. It went down by 170, didn't it, guys? How could it go down? Dividends and
Net loss.
Lose money, net loss. What's the net loss that must be there? 160. I have a net loss of 160. You got another one of the answers. And where does that net loss come from? It's not net income. What is it? Net loss, which is 160, isn't it? Now, is that a debit or credit, you guys? That's a debit. This is a debit. The revenue's a credit. The brackets don't mean negative. They mean credit here, right? Okay, we use that all the time. So I got a credit here, and that's a debit. So what do expenses have to be? 400 plus the 160 you lost, right? It's got to be more to have a loss. This one's 560, isn't it? And you know what? We're done. But no, not quite. One more piece. What is it?
Well, now we know equity.
Oh, we need our equity and our liabilities. We can't get liabilities directly, but you get the ending equity, can't you? What do you got, guys? 100 plus 150 is 250. So this is a horrible company this year, isn't it? Okay. And so, what do you think? A bad year. Okay. What do you think? 350. Now we're done. How fast could you do this if you know what you're doing? Nothing. Yeah.
Where does the 320 come from retained earnings?
I backed into it, did it? No, I didn't. We had 370 of total equity over here, right? You know how that came, right?
Yeah.
That was 700 less 330. No, this is 50. Just 370 less 50 must be the 320.
Okay.
Got it?
Yep.
Okay, good. We're good, everybody, huh? This isn't too bad, is it? You guys do the other one. Go. See how fast you can do it. Do exactly the same thing. Okay? And you can use that anytime you're trying to figure out what's going on with the balance sheet. No matter how complex things get, you can look at all these relationships. Are we coming? Everybody done? That yes? Yes. Close? Yes, it's yes. Yes, no, yes. Make sure you get answers for these, you guys. Once you figure this out, you just nail it. Okay. I don't know what's it look like on this quiz. It'll be the same or some little different format. Doesn't matter. is not magic setting it up this way, you guys. That's a balance sheet, right? That's an income statement. It's not something we have memorized. It's what they are. You know, you can see them throughout their career. It's just how they're set up, okay? Same thing always applies. Okay. So we're going to have beginning and ending again. Beginning and here. Okay, what do you know in the second one? Just make sure you write down everything or you won't be able to work it. What's that?
The beginning.
Yeah, well, or all of it.
Retaining.
Beginning or end? Beginning 160 retainers. Okay, good. I just go through them in order that they're listed there. What the heck? Who cares?
Contributed capital is 200
Now that's how much to start with or in?
in the beginning.
Okay.
Start with
200 to start with. Okay.
Liabilities start with 270. From that, you can figure out the equity and then get assets.
Well, the equity is 200 plus 160, isn't it? It's 360. You can do that right now if you want. I don't care. And then you could add the 360 to the 270. You get the assets, couldn't you? How much is that? Okay, good. Excellent.
And then on the ending, the contributed capital is 100.
Okay. So how much was contributed during the year? Negative 100. They took 100 out. Okay, so you got that one, right?
And then that answers owner's investment. But revenues is 240 at the end. Let me start with revenues. Liabilities 300 at the end. Retained earnings at the end is 200. You don't pay a dividend. And then
This is zero.
yeah, it's just zero. And then we're trying to find expenses and assets. Nothing like that.
Yeah. What can we do now?
Do equity again.
100 plus 200, you think?
Good.
300?
At the beginning.
They added 200 and 160. 200 beginning contributed capital and 160 beginning retained earnings, is that right?
Yeah.
Those are the beginning balances?
Yeah.
Contributed capital, what the owners contributed plus what you have retained of your earnings is your equity, right? Beginning?
I'm trying to figure out, but I don't know what else.
Beginning contributed capital was 200, right? Did you not get it
No, I
written
put the
down?
wrong number on somewhere else.
Ah, okay. So 200 and 160, that makes sense. And we get our 360. And then at the end, it's 100 plus 200, huh? It's 300, right guys? So what's assets? 600. Okay? Once you understand stuff, it's simple.
I can tell that our ending retained earnings was 40.
Oh, our increase in the retained earnings was 40. So there's no dividend. Started 160, went up to 200. So this is 40. So what must that be? Net income. So net income is 40, which makes your expenses 200, and we are done. Okay? Easy. Doesn't take very long, does it? So ready to move on, do something else? So these are over, if you look at 2 and 3, I've got this overstated thing or understated, and then I have increase or decrease. Okay? Well, really, what you need to do is come up with what the journal entry would be, then talk about what that would do to the account, which is the increase or decrease idea. And then after you have that, you'll know, if you fail to record it, whether the accounts are overstated or understated. Because you know if you're going to increase them or decrease them, right? Because you know what your journal entry is. So let's start with number 2, that's fine. In fact, let's do both for both. Let's do increase and decrease and overstated, understated for both of these problems, okay? You have to do it anyway to get to the overstated, understated, okay? Or you can sit there and think about it and do it in your head and spin your wheels for a long time. I think it's inefficient. Probably far better to just say, okay, what's the effect on the statements? Here we go again. And by the way, if I was doing this, I wouldn't write this stuff down. What for? But I also know what I'm doing. You don't yet. So as you learn what you're doing, would it be nice to have a crutch like this? Yeah, that's all it is, right? Then it's fine. There's no big deal. By the way, if I'm doing 10 transactions, I'd sure do it like this. I can't remember 10 transactions in my head. Or I'd do a spreadsheet that would represent the same thing, right? Be fine. Or I'd use a whole general ledger maybe. It's the same thing. The general ledger is this, isn't it? All the assets, all the liabilities, all the equities. You'd have thousands and thousands of accounts and we're still doing the same thing. Got the idea? Pretty powerful. All right, anyway, so what would, and I guess we're going to have contributed capital retained earnings again, right? Okay, so equity in general. What would be the effect on the year-end financial statements of failing to record a necessary adjustment for insurance that was used this year? On March 1st, $3,600 payment was made for coverage for 2 years. The payment went to a deferral or an asset, a permanent real account, right? So when they made the payment, what did they do? They credited cash for how much? $3,600. And they debited what for $3,600? Prepaid. Went to the asset, right? Said that. So prepaid insurance, I guess. Okay? What date was that? March 1st. Okay? What's their year end? Says it's December 31st, does it? Okay, what's the adjusting entry? This is the source entry, that's not the answer, right? That's the source entry that was done at the time of the transaction, paying out cash. Okay, how long a policy was that for? 3 years, 2 years? 2 years. How much is it a month, everybody? Divide 24 into 3,600. Is that $150 a month? It's $150 a month. How many months went by between March 1st and December 31st? Be careful. Got to include March. It's 10, right? This is 10 months. Does everybody agree? And we just said it's $150 per month for 10 months. How much of it did we use up? 10 months at 150. It's 1,500. Everybody agree with that? If you want, you can do it like this. If this helps you, do it, right? If you don't need it, don't. Always use that policy. Only do work if it benefits you. Otherwise, goof off. Cost-benefit relationship, right? If I'm going to get paid well, I'll take away from my beer and bourbon time, and wine time, put it into work. So later I can afford the beer and bourbon and wine. Got it? Okay. And all the other shit no one wants to buy. Right? That's all. Okay. I do go to stores sometimes. Buy bourbon. Yeah. Okay. Anyway. You'd think the way I talk about all I do is drink. I'd like to, but you die if you do that. So yeah. Anyway, so and get fired and little things like that. Okay, anyway, so don't get too carried away. Prepaid insurance, though, we put $3,600 in here. We have nothing in insurance expense. That came in on March 1st. You could set it up like this, huh? You don't even have to do the journal entries. You could write it in here instead if you wanted. Okay, what do you want the balance to be in prepaid and insurance expense at the end of the year? We just calculated $1,500 for insurance expense, didn't we? I want this to be $1,500. Well, what are you going to do? Debit insurance expense for $1,500, and that's your adjusting journal entry. Here we go. Debit insurance expense, $1,500. And credit what, of course? What are we using up? The prepaid. There we go. We got it. So there's your adjusting entry. So if I asked you for an adjusting journal entry, you think you could pull it off? If I asked you for this entry, could you do it? Of course. If I asked you for this entry, could you do it? Of course. If I asked you what the ending balances are in each of these accounts, could you do it? Of course. Oh, that's all kinds of stuff like that. What's the ending balance at December 31st here?
2,100.
What does the 2,100 represent? How many months did we have to start with? 24. How many we use? 10. How many are left? 14. What is it per month? 150. What's 14 times 150? 2,100. Easy. Double check. You can't miss these, can you? Practice, practice, and get more and more confident. And then if you screw one up, relax, go to the next one. Right? Fine. Big deal. Okay, 80% an A in here. Right? You're right 80% of the time. CPA exam, 75% passing here. You know what? Same thing's true for medical exams. Blah, blah, blah. You mean we have professionals that we hire and pay a whole bunch of money who only get 75% right? They don't get 75% right in their career. Just on an exam they're really prepared for, and their career is far less than that. That makes you feel good when you go in to a doctor, huh? They don't have a clue what's wrong with you. You're going to tell them what's wrong with you anyway. It's true, right? And then they're going to try to help you in the rest of your career because of that, right? Ours is no different. We don't know what we're doing either, right? Trying to figure it out all the time. That's why you get paid well. Trust. Hard work. Okay, good. So tell me, what will these do? This wanted to know overstate and understate, but let's do increase or decrease first. This is the entry that they failed to do. But if they did that entry, what would happen? Expenses would go up by 1,500, and that's what you write down. What is the revenues? I don't see any revenue in that journal entry, do you? So nothing, no effect. What about net income? It decreased by 1,500, which causes what, everybody? Retained earnings, which is an equity account, to go down by 1,500, of course. And what's the credit over there? Prepaid expenses, that deferral, right, that deferred asset. What are we going to do? If we do that, it would reduce it, wouldn't it, by 1,500. So that would be the answer to increase or decrease for that first problem, wouldn't it? But overstated and understated. If you need to reduce assets and you fail to do so, what's wrong with them? They're overstated. This is too easy. Oh, by the way, what's wrong with liability? There's no liability effect. No effect. So it's nothing. It's nothing, right? No effect. How about equity? Overstated. Well, you know what? If the assets are overstated, nothing's wrong with the liabilities. Of course, the equity's overstated, right? It's got to be the same. They're going the same. Debits equal credits. You can always use that. Okay? Revenue, no effect, right? Expenses, if you don't increase them, they would be understated. And net income, overstated, which is what causes the overstatement in equity. Boom. You just can't miss, can you? What's the key thing? Can you figure out what the journal entry is? If you don't get the journal entry, everything else falls apart, right? But can you do the journal entry? Sure you can. It's just an adjustment. Relax and do the adjustment. Now I realize that's a lot of work for 2 points, isn't it? I think the 5 points on number 1 is far easier per minute than the 2 points for number 2. But I don't want to flunk all my students, so I gave them something everybody can do. Well, hopefully, if they study hard, they can. These take a little more thought, don't they? They really do. There's more steps here. Yes?
On, for overstating, understating, would it be like kind of a cheating way if we just thought of like every time it decreased, we overstated, and every time it increased, we understated?
Well, if the entry you did not record, we're saying we failed to record this, if the entry that we failed to record would have increased expenses, well, then they're too low. Does that make sense?
Yeah.
Or if the entry would have reduced assets, then they're too high. So yes, exactly, you could do that. But remember, what you're doing is you're picking up the effect of that entry that you failed to do, right? Yeah. Okay, good. You're good. All right, let's do the same thing with the other one, number 3, where I asked for increase and decrease. Okay. So this is going to be payment in full of a $10,000 note receivable plus interest for 6 months at 9% per annum. No interest has ever been accrued on it, right? What would be the effect of now doing it, I guess, huh? They're paying the note. What do you think the journal entry was when we borrowed the money? Let's say they gave us cash. I mean, we could have bought something and signed a note for it, or they, you know, they're going to give us a piece of equipment or something. Okay, but let's say that we borrowed cash. What would the entry have been at the date that they borrowed the money?
Aren't they getting the money?
What's the other way around?
It's a note receivable.
Oh, note receivable, they owe us. Okay, let's say we loaned them cash. I apologize, thank you. What do we do at the time when we get the note receivable? You got to know which side of the deal you're on, huh? Good man. Okay, so we've got a note receivable. So let's say we loaned somebody the money, huh? Okay, so what do we give them? Cash, which would be credit cash. How much was it? Okay. And then what would we have debited? Well, or they signed a note, so note receivable. Okay. Note receivable is just that they signed a piece of paper that says they're going to pay us on a specific date or specific payments, right? And they're going to pay us interest and whatever it is, okay? And that way, if they don't pay us, we can go to court and we can sue, and we got a piece of paper that says they owe us the money. An open account on an account receivable, you know, you got to prove you delivered the product to them, and there's no interest on it. There is a specific due date, but you're trusting, right? 30 days to pay or 10 days or something. Okay, good. So that's what would have happened, though. So now we got a notes receivable in the books, and now they're going to pay us. So what would the adjusting journal entry be? Well, actually, it's a source entry. What would the entry be? What would the entry be when they pay us? What are they going to pay us with? Cash. What are they paying off? A receivable and interest. And what are we going to call the interest? Is it interest expense? For them, it's expense, because they borrowed money and got the use of it, and the cost of using it, right, to generate revenues, using the cash to generate revenues somehow, right, would be their interest expense. What is it to us? We gave up our cash, let them use it. It's like rent of the money, isn't it? Interest revenue. Good, guys. Okay, got it? So, let me just figure out how much note did they pay off? The whole 10,000, right? So you have no receivable with 10 in it, you take 10 out. Gone, zero, huh? Well, all we gotta do is calculate the interest, huh? Well, none has been accrued, and what that means is they have not been debiting interest receivable and crediting interest payable every month. I needed to tell you that, or you wouldn't know how much was payable. Get to that later. Okay, we'll do that. That makes sense? If they already accrued it, if they every month they're debiting interest expense and crediting interest payable, whoops, interest revenue. If every month they debited interest receivable, every month they debit interest receivable and credit interest revenue, and they do that month after month, we wouldn't have to record very much interest revenue now in the last month, would we? Just 1 month. And we'd have interest receivable of 4 months record. This 5-month thing or 6? 6 months. So we'd have 5 months already in interest receivable. So to change our journal entry. So I had to tell you that. That's a really great question. Maybe we'll do it that way here in a second. Okay? So why not? So how much do you think they're going to pay of interest? It's a $10,000 note. What was the interest rate? 9%. So if it was for a full year, it'd be $900, right? Yeah. But it's not a year, is it? Oh, by the way, when we state interest rates, do you think that's 9% a month? You go to jail if you charge people that much interest, right? It's illegal in every state to charge 9% per month interest. Okay, although loan sharks get away with it. When I say loan sharks, I mean, you know, those fast credit places that you see in the poor parts of town? Those people are stealing. They should be illegal. And what's really bad is they're owned by Bank of America, places like that, and Chase Bank. They don't put their name on it. Why? Because they're ripping everybody off. Yeah, it's ugly. It's ugly. What's going on in the industry? Anyway, and everybody doesn't do it, but some of them do, right? And they're charging people just unbelievable interest rates. Just unbelievable. For payday loans and stuff like that. People who are really poor. They're victimizing the poor. Jeez. You know, there are legitimate ways to make money. Don't steal, okay? Don't steal in your career. Instead, earn. And you could make $1 million a year, you guys, without stealing from people. If you want to work hard enough and you know, you get a good enough education, you get in the right positions, you take on the responsibility. You give up most of your life for that money, but you can do it if you want, right? It's fine. I don't care. Don't steal. Okay, anyway. How many months? So anyway, that's not 9% a month. It's not 9% for 6 months either, is it? That's not what we do. You'll either state how much it is per month. This would be 3/4% per month, right? 9 divided by 12. Or you would say the interest rate, and we mean per year, even though it's only 6 months. So what do? 6 months out of 12. So half of that, 4.5%, right? Everybody good? So how much interest will that be? It was 6 months, right? Count the months. Okay, good. How much is that? 450. So how much are they going to pay us? 10,000 plus 450. Everybody good? I know you can do this. You've calculated interest before, of course. Okay, interest revenue is 450. Okay, everybody good? Now what we want to do is say, what would be the impact of that? So the question asks for increase or decrease. Can you guys tell me what that would do? There's 3. No big deal. 3 journal entries, 3 debits and credits. Notice the debits equal the credits. There can be as many debits as you want and as many credits as you want, whatever you need, what you exchange, right? So there could be transactions get real complex. Again, imagine Exxon buying another oil company. There's a lot of debits and a lot of credits, right? Okay. Probably a lot of different journal entries even, but it's okay. All the debits all equal the credits. Okay, so what does debit cash do? What does credit notes receivable do? Decreases an asset. Net effect on assets, increase of 450. So we write down increase of 450. Make sense? But what's the interest revenue? Revenue, of course, equity, more revenue, therefore, more net income, therefore, more equity. What about liabilities? There's no liability in that journal entry. No effect. Expenses, no effect. We're done. Easy, huh? Increase revenues 450, no effect on expenses. Increase net income 450. Increase assets 450, no effect on liabilities. Increase equity by 450. And always, of course, make sure that the asset change equals the liability plus equity, of course, right? Okay, make sure you can script your entry. All right, what if we did overstated and understated on this? What would you say? If I changed it to that, say you take this problem, just ask for that instead. Big deal, huh? Assets would be what? Understated if you fail to increase them, no effect on liabilities. Equity, understated. Revenue, understated. Expenses, no effect. Net income, understated. We're heroes. Got it? It's going to be easy, isn't it? How many transactions did I come up with again? Oh, jeez. You name it. You just keep going, can't you? So, kind of fun. Oh, I hope you get this next one right if I give you something like this, and I probably will. How do you increase each of these accounts or decrease? The first one's an expense account, you guys. Debit. D is unearned revenue, which is a liability. How do you increase it? Credit. Accumulated depreciation is a asset, but it's a contra asset, so how do you increase it? Credit. Prepaid salary. Debit because it's a asset. Okay, all right. So then in number 5, it goes on and on and on with journal entries. Just relax and do them. So, and 15 points. Now what I did on this problem is I had you do pretty straightforward, pretty simple source journal entries where there was a transaction, you recorded. And then towards the end, when they all say December 31st, I went crazy. Those are all adjusting journal entries. Don't panic, just keep working and let yourself think about it. And conveniently, I put these towards the end of the quiz so you'll know how much time you have to sit and spin your wheels thinking about some of these. Some of them are pretty tough, right? But that's okay. I want to see what you can do, okay? See how far along you are. And they'll be really hard on a quiz, and then it'll be a little easier on the test, and it'll be a lot easier on the final, right? And you leave here knowing what you're doing, right? You go to the next level, okay? All right. Now, accounting classes or your career, whatever. Okay. All right. Michelle Company, an advertising firm, completed the transactions given below. That's my daughter, Michelle. How about that? She doesn't have an advertising firm. The company prepares financial statements at year-end only. Okay, good. On December 31st this year. Please prepare appropriate journal entries. On January 31st, now you're going to want to keep track of the dates on these things. When I give you the date, I probably give it to you for a reason. When you get down to the December 31st entry, what's going on? You're going to adjust, well, you're going to close the books maybe. You might have a closing entry. Excellent, I like that. You are going to do that. But what are you going to do before you close? All your adjusting journal entries to make sure what? All your balance sheet and income statement accounts are correct, right? Best estimate you can get at the end of the year. You're going to do your balance sheet, income statement, cash flow statement, right? And then what? Close the books and start over. Okay, all right, so absolutely. All right, anyway, so January 31st, so let's just do it. It says purchase equipment for $35,000, paying $10,000 down, signing a note for the remainder. And there's a whole bunch of stuff that comes after that. Interest, payments every 6 months, $12,500 payments, right? That's because they owe $25,000 if you're $10,000 payments. And then you're going to plus interest, and then they're going to have $2,000 salvage if they get depreciated over 6 years. Wow. All right. All that information, what do I do with it now? Let's think about this. How much interest expense do I have the moment I borrow the money? None. No time went by. You have interest expense as time goes by. So how much interest do I owe? None. No expense, no interest. How much depreciation has happened yet? How much have I used this equipment? Not at all. How much depreciation expense do I have? None. When will I record that stuff? when I do a financial statement. If it's monthly, I'll do it every month. Quarterly, once a quarter, every 3 months. Annually, once a year. Only on this one, this is January 31st. How long are you going to depreciate this year? Year is December 31st. 12 months? I don't think so. I think January 31st is the same as February 1st. 1 month's gone by. It's only 11 months. It's not 13 in a year, is there, you guys? It's not 12 months. It's 11. Almost everybody misses. But they look at that. Oh, it's got to be a whole year. Who says? You only own the asset 11 months. Oh. You got to be careful with the interest, too, right? Pay attention. What's the real business deal? What do we do? Right? We've only used the equipment for 11 months. I only want 11 months depreciation then, huh? Make sense? There'll be 1 month left over for a year way out there at the end of its life, right? When we're done. That's the 6-year life. So the first month of the 7th year, he has depreciation. Last month, huh? It makes sense, wouldn't it? So we get enough months. Okay, so let's do the journal entry. What do we get? Which is a asset. We have more, so we debit. Now, I keep saying that. I know for you guys, particularly people who'd be here, I don't have to say that anymore, do I? Why am I saying it? Because when you get in trouble, right, at this point, I know you know it. When you get in trouble, you're working a problem, you don't, I don't know what to do, relax. What you get, what you give up. The things I got and gave up have to be what? Assets, liabilities, equity, revenue, expense, or contra of those, I guess, now, right? That's it. And you know how to increase and decrease all of them? You got to pay them. The key is understanding what happened. So the equipment costs $35,000, debit $35,000 to equipment. What do you want to credit? What do we give them? Cash. How much? And then it says we signed a note for the rest. How much is that? And what do we call that? Note statement. Remember a week or so ago when this was hard? Not anymore, is it? Because you know it. Yeah. Okay. Then what? March 1st, I guess. We'll come back and we'll use that. What was the interest rate? Yeah, 6% per annum per year. Okay, if it doesn't say assume per year, because that'd be, it says per month, obviously. Okay, and then for depreciation, what are we going to have? What was the life? 6 years. Well, how long was the note for? 2 years, 2 payments? I think it's 2 years, because I was doing $12,500 plus interest, right? Every 6. Oh, it's every 6 months.
No, wait, no, it's not.
Is it every 6 months? Oh, I'm lying. 1 year.
Yeah, there we go.
6-month payments. 2 6-month payments. So everybody got it? So we're going to use that, aren't we? That information we're going to use later. So I don't care about the 1 year. What I really care about is 2 payments one every 6 months. Okay, good. It's 2 payments. 1 every 6 months, right? $12,500 payment. Good. Okay, on the depreciation, 6-year life, and then there was the salvage value. What is that? Okay, and it's going to be straight line. Okay, so we're going to use that information later. So it's not like we don't need it. You don't have to write it down or anything. I just wrote it for us to refer back to it. It's in the problem. So later when we get to an adjusting entry, of course, you go find out what's going on. Huh? Okay, March 1st, we purchased supplies for $2,000 cash. They're placed in a storeroom. Okay, what do you want to do? Debit what? Office supplies inventory. Okay, it's not merchandise inventory, it's office supplies inventory, right, guys? Supplies, that's different. Merchandise inventory becomes cost of goods sold when you sell it. Supplies becomes supplies expense when you use it. Make sense? Okay. How much was it? $2,000. And we paid cash for it, did we?
Yes.
What if we bought it on account? What if it said that?
Accounts payable.
The account's payable. There's nothing to this, huh? That's what it is. We could even have prepaid. Don't worry about that later. Okay. Deposit. I'll get to that if you want. All right. Then it says at the beginning of the year, office supplies were $500. So we're going to use that information too. What do you got? For office supplies inventory, what was the beginning? How much did we just buy? How much do we have? $2,500. You think that might be handy later? For an adjusting entry when we find out how much we have at the end? Yeah, okay. We do this in real life, no kidding, guys. March 31st. Paid the rent for the month of March. We used the property, whatever it is, building probably, right, maybe equipment. But whatever we rented, we used it in March. So what is it in March? Rent expense. Yeah. Did we pay for it too? Yeah, so this was an easy one. What do you debit?
Right.
That's how you increase expenses, all of them, right? And credit? Things are flying, aren't they? Okay, we're good. We're done with that one. Will there be an adjusting entry? What for? You used it up, it's gone, right? Cash went out, that one's done. Okay, April 30th. What happened? Provided advertising services to clients for 130, 80 on account, cash for the remainder. Why do I provide advertising services? So I may earn my revenues. And what do we want to call this? Oh, wow. Really? Advertising service revenue is what we call advertising service revenue? It's brilliant. Okay? Way to go. Okay. This is revenue. How do you increase it? Because we have more, right? How do we increase it? Credit, of course. Why? Because it's a subset of equity. Equity's increase with the credit because it's on the right. Solid now, isn't it? Okay? So, and by the way, you can write this down first, but leave yourself some room to write down your debits so you don't drive me crazy. You know, figure out what you're doing. Okay, was it 130,000? So I left room for a couple debits there, didn't I? What did they give me?
Accounts receivable and cash.
Accounts receivable, which is one asset, and cash, which is another asset, and I debit them both. How much accounts receivable? 80,000. That was on account, so it's accounts receivable. How much is the cash they gave me? 50,000. Good deal. We're done with that one. Okay. Imagine these points just adding up, adding up. And on a test, it'll be double the points per thing you do, huh? Nope. 25-point quizzes. 4 times. All right, we can give you 60 points for that problem. But anyway, yeah. Okay. Anyway. But you got the idea? You get a lot more points. So here you're not getting very many points for each thing you do, but it's just practice. Okay? What we're looking at. I'm looking at. May 30th? The next one, right? What happened? Yeah, we received 60 of that 80, basically, is what it is, right? Although they might have owed us money before. Customers might have owed us a lot more, and then we added 80, and now we're taking 60. That's all. So what did they give us?
60,000 in cash.
So debit?
Yeah.
Good. And credit?
Accounts receivable.
Absolutely. Happy campers? It's easy, wasn't it? Okay. Paid insurance premiums on June 30th. 6,000 is for 1 year. We're going to want to remember that. 1 year policy. Okay, now there's 2 ways you could record this. Right? Debit. Balance sheet or income statement. Yeah. I didn't say which one, so I guess you could do either one. But if you do one, one versus the other, it changes your entry later, right? Your balance will be different. Okay. So if we paid for insurance for 6,000, what do we pay with? Let's do the easy part. Credit, cash. Think so? And debit. You could go to prepaid insurance, and we'll come back later. Remind me. We'll do it if we went to insurance expense. Okay. Fine, you do either one. We don't care. All right, but that's a 1 year policy, so if it's in prepaid, we're going to use up some of it by December 31st, aren't we? What are we going to use up, 6 months worth? July through December. Everybody agree with that? That's a 1 year policy. I guess we're going to use up half of it. Adjusting entry is going to be easy, isn't it? Okay. All right. Let's see. Paid the first payment. Now things start getting tougher. July 31st. We are going to pay the first payment. Okay, so let's go back where we were. How much did we borrow? Not 35. 25, because we gave a 10 down payment. We spent 35, but, right? 25 is our note. What are our payments going to be? 12.5 plus interest, and the interest is 6%. You guys agree with that? So isn't it going to be Well, how much money are we gonna pay interest on? The 12.5 or the 25,000? I think you're gonna pay it on the 25,000, don't you guys? Right? You owe them 25, they want interest on the 25, not just on the 12.5 you're paying, that would make any sense. So if the note payable is 25,000, if it had been for a year, it would have been what? 6% times that, right? But it's not for a year, what is it? 6 months, 6/12. So what's 3% times 25,000? 750. $750 is the interest. Now what's the payment? It's $12,500 plus that interest, right? Got it? So how much are we going to give them? Things got harder, didn't it? You have to think your way through. What's the cash we're going to give them? $13,250. And we are going to have to record a journal entry. So that's going to be the cash going out, right? $13,250. What about the payment? What's that going to go to? What are we reducing? The note payable is going to have a 12.5 debit to it, right? I've got notes payable on my books of 25,000, and I'm going to make a payment of 12.5 against it, right? And how much am I going to now owe them? 12.5, of course, right? But I'm giving them 13,250. Well, what's the rest? It's the 750 interest. I borrowed this money. I got to use it, right? Generate revenues with it. So I bought some equipment, right? Using the equipment to generate revenues. So the interest is what? Expense. Boom, right? So here we go. Let's write our journal entry. How much cash did we say we gave them? 13,250. How much note did we pay off? What does a debit do to a liability? Decreases it. What do you want to do if you paid it off? Decrease it, right? And then you got 750, which we calculated to be the interest. So what do you bet we call that interest, huh? Interest expense. By the way, I was going to do interest before, wasn't I? I kept running and going. We'll do an example of it. Interest, remind me. Interest expense, why not interest payable? Because we have not accrued it. If we had accrued it, most of that, or some of that rather, would be interest payable. Right? It'd be paying off payable I had on my books. Because I already would have recorded the interest expense. Okay. All right. So that's a little tougher, huh? It'll get progressively worse, I guess, or harder, whatever. More challenging. Okay, let's go to October 4th. Received advance payment of $40,000 for clients for advertising services that we delivered in the next 6 months. Just getting easier again. I like that. Okay, what do you want to do? Debit cash. I think when I receive cash, I debit cash. I like it. Okay. I'm going to perform these services later. Unearned service revenue. Unearned advertising service revenue. You like that? Whatever we call it. 40,000. Sound good? What I'm going to do is I do the work. Debit unearned revenue, credit earned revenue, service revenue, advertising revenue, something like that. Okay. And then on December 31st, we've got one. Now when we get to December 31st, there are source entries on the line for the year. You can write checks and receive money and stuff, right? Pay payrolls. But a lot of them at the end of the year are what? Or a number of them at the end of the year are what? You're adjusting entries, huh? To get your financial statements right. Okay? Whenever you do financial statements, quarterly, annually, monthly. Okay, anyway, so it says employees have earned $35,000, we haven't paid them yet. It's not recorded yet either. What do? They earned it, so we got the benefit of their work, so we have expense. So maybe wages and salary expense, or salaries expense, or wages expense. Wages for hourly workers, salaries for salaried workers, right? You know, people that work for so much per month. Okay, so we got salary expense maybe. It's an expense because we used it up. True. What do you want to credit? Probably not accounts payable. That would be for inventory probably. Wages payable, salaries payable. You got it. There's an R in there. Increase the liability. When we pay that off, what would we do? Credit cash, debit, dollars payment. Not expense again. Yeah. It gets too easy, then we can't do it. I'm concentrating on the hard things, leave me alone. Okay, so then on K, I guess, December 31st is where we're at. Oh, no, before that, we're at J, okay. Counting the supplies, I guess I should start calling what they are. I, J, okay, there we go, all right. J is counting the supplies, and their cost is 700. Ah, what do we have for supplies, you guys, before? We had 500 to start, and then we bought 2,000, right? That's on March 1st. So we had 2,500, and they count them at the end, and there's only 700 left. How much is gone? 1,800. Where did it go, of course? Office supplies expense, right? He used it up. So what do you want to do? Debit office supplies expense? Everybody agree with that? Yeah. 1,800. That was not too bad. And credit? Office supplies inventory. And now we get our office supplies inventory down to the 700 we want it to be. When we get our expense up to the 1,800 we want that to be, because that's what we do. Got it? Getting real easy? All right. K. Completed 25,000 of work that we were paid to do an H above. All right. So that was this one. 40,000 cash came in. It's all unearned revenue. Now we earn 25 of it. Do we owe it to the work to him anymore if we did the work? No. So what do you want to do with that liability, unearned revenue? Debit it. And what do you want to credit? Seeing as you earned it. Service revenue. You got it. Okay. So what did we call it before? Advertising. There it is. Advertising service revenue. It'd be the same thing, wouldn't it? We get rid of the unearned advertising revenue. So debit unearned advertising revenue. That account. 25,000. We'd have 15,000 we're going to earn sometime in the future, right, guys? 40 less 25. And then what do we have? Right, what did I call it? Advertising service revenue? Use the same account, of course. Okay? Easy, huh? I hope you guys are not just, I hope you'll learn how to do this. I think you are. But also I hope you see how valuable it is. You can do this. You should feel good about yourself. Most people don't put in the energy to learn this shit. Most people don't put in the energy to learn much English. Well, it's a major societal problem worldwide. Everyone would live much better if everybody did everything they could do. Right? And then share. Right? Generate as much wealth as we can and share it with everybody. You have to share all of it. You can keep more if you don't mind. Okay. Just don't try to keep all of it. It's crazy. We'll all go broke. People try that. Do we need an entry relating to the insurance and F above? Okay. What do we have for the insurance? That's this one. Okay, debit prepaid insurance 3,000, 6,000, credit cash 6,000. We said it was 1 year. It's 6 months. Everybody agree it's 6 months? So how much got used up? 3,000. So what did it become? You used it. Insurance expense. Excellent. And credit prepaid insurance because it's gone. What's the balance left for prepaid insurance? 3,000, which is going to be used in the next 6 months. What's the balance in insurance expense? 6,000, because that's what, or 3,000, I'm sorry, because that's what we used up. Got it? Okay, that's easy. Let's go back right over here, and let's change it. What could the entry have been instead? This is an or, right? What could it have been instead? We could have credited cash 6,000 and debit what? Insurance expense. But now we'd have 6,000 in insurance expense. It'd be 3 too high, wouldn't it? Everybody agree at the end of the year it'd be 3 too much? And we'd have no prepaid insurance. And it should be 3 higher, shouldn't it? So how would you get there? What would you do when you get down here at the end? Or so if you do it this way, you have to do both of them this way, right? You can't do one way and one the other. Makes no sense. So what would you do then? Debit prepaid insurance for the 3,000 that we have not used up. And credit? Insurance expense. It's only the same dollar amount because it's half, right? Okay, ta-da! You do it either way, couldn't you? So if I tell you it's going to an income statement account, you could do it, couldn't you? If I tell you it's going to a balance sheet account, you could do it, right? Okay. Yeah. We need an entry relating to debt in A above. Uh-oh. Now, all hell breaks loose. Try and do it. The debt, the 25,000. Think about where we are. What are we doing? We've made one payment and now we're making the second payment. Compute it and write it down. Go. What do we need to do? Look at those two entries we've made, right? This first one recording it, right? And then later we made a payment somewhere. There it is. And now we're making the second payment. What do you need to do? You got to know how much sheet of paper there in front of you, right? Yeah, figure it out. Write the journal entry down for me. Can you do it? Think about what happened, where you're at. What is the balance in the accounts? What do you need to do? How does that work? Did you already do it? How's it work out?
That's been 6 months since July 31st.
I don't care.
Still did it.
You gotta do something. You don't pay it yet. I agree with that. The time went by. Oh. What do you gotta do? Every day that goes by, do you owe them more? You do that. What if you did want to pay it the last day of the year? Would you have to pay them more than $12,500? I'm never going to loan you guys money. If you think you pay me early, you don't have to give me interest. That's not working. If I didn't have to pay interest, if I pay on the due date, I have to pay interest, I'd always pay the day before the due date, right? So there's no interest in it, right? Wrong. Of course there's interest. There's interest every day. So what would you have to do? Compute how much interest there is and record it. Don't you think? You owe somebody $12,500.
I know, but we paid them 13 something, so does that not count?
Oh yeah, I borrowed 25 from him. How much have I paid him back?
Well, it says it, in that thing, in the note table on the account, you said that you only paid them 12.
I did. The rest was interest, wasn't it?
So we still owe them 12.5.
Yeah. So you owe him $12,500. How many months are going to go by? That was July 31st. How many months go by? 5, right? Oh, what interest rate are you going to pay him? What was it per year, you guys? 6%. 12.5. Why is it not the 25,000? I don't owe him 25,000. I'm not going to pay him interest on money I don't owe him. I only owe him 12.5, and they want 6% per year. That's what I agreed to. And this is 5 months, right? You're right. I'm not going to pay him yet. But what am I going to do? I am going to accrue 5 months interest. You know what's fun? Is the students who do figure this out do it for 6 months and it's still wrong. Oh, it's 5 months, isn't it? From July 31st to December 31st, it's only 5 months. So what's 12.5 times 6% divided by 12 times 5? What do you get? 100, what is it? 312. I was going to say 750 was half a year, so 312.50. That's the amount of interest there is. Would everybody agree with that? That's the interest. Give me the journal entry then at the end of the year. 1231. Interest what? Yeah, sure. The cost of borrowing the money. Interest expense. 312.50 was it? Credit what? Interest rate. Yes, Yes, sir. And this is going to pick up the interest example I wanted to do. This is not in the problem, but what would the journal entry be on January 31st when the payment's due? Give me that. Give me what would happen on January 31st. Later, on January 31st, you pay this. What would you do, gang? Give that one a shot. What am I paying them? $12,500 plus interest. Right? What's that journal entry? Stuff gets challenging fast, doesn't it? Debits and credits aren't challenging anymore, but business is. Right? You know, okay, what happened? What are we doing? What's the deal? By the way, if you understand this stuff, the person you're dealing with doesn't. You can take their money away from them. Don't be unethical about it. But if they're well educated and you're well educated, and they're lazy and you work hard, they can give you their money if they want. It never bothered me to take a lot of money away from people who had lots of money. Fine. Some people are crazy enough to pay $1,200 an hour for me to bullshit with them. Okay. It's all right. And they tell me what they'd like to know, and then I tell them they're happy with me. It's really good. Consultants, so I can get you. Kind of like. Then the next year you come back, they have the same problems. They ask you to solve them for them again. You ask them what's wrong. They tell you, and you tell them again. They pay you again. I don't hire any consultants. I'd rather have an employee than a consultant. But they might actually do something. So, the consulting pays well. What's the journal entry? What are we paying off? Note payables going away. How much? 12.5. That's excellent. What are we giving? Cash. How much? 12,875. 12,812.5. You guys are scaring me. How much do we? Okay. How much do we have accrued of interest? So we're going to get rid of an interest payable, right, with the debit. How much interest payable did we just record?
But if we were paying it on the same day, right?
No. You're paying it a month later. It's not due that day. It's not due December 31st. It's due January 31st, right? So you'd wait 30 days and pay them. You wouldn't pay them early. What for? Okay? So are you paying off the interest payable? Are we paying off that interest payable? Did you guys pick up on that? We are, right? And you guys want to have 750 or more? What? How much interest is there going to be? What's the total interest you're going to give them?
Are we giving them the interest for the 6 months or the 5 months?
Well, I don't know. How many months has it been?
It's been 6.
Of course.
You put interest.
Okay, you loaned me money.
Yeah.
It's been 6 months since I gave you an interest payment. You want 5 months interest or 6?
I want 5.
You only want 5?
Well,
Would you like to loan me 100,000, please, and I'll take it for 6 months, and then I'll just give you 5 months interest.
I'm so confused. You gave me money, and I don't want to pay the 6 months.
I didn't pay you. We just accrued it. If you're the one who loaned me the money, you didn't get any cash. And you don't want 5 months interest. If you loan me money for 6 months, what do you want? 6 months, don't you? How many of you would loan money to somebody for 6 months and ask for 5 months interest? Nobody. You want all 6. The fact that we accrued the interest expense and the interest payable, that's an accrual, right, guys? We accrued it. The fact we did that doesn't mean that we're not going to pay all the interest for the 6 months, right? So you're so pretty much there, right? You want 6 months interest, but it's not going to be $750 for 6 months. That's when we owed them $25,000. We took 25,000 times 6% times 6/12, and we got how much? 750 was it? There it is. We got 750, didn't we? We don't owe them 25,000. We only owe them 12,500. Ah. So what do we need to do, everybody? We need to take 12,500, which we owe them, times what? 6% times 6/12, because they want interest for all 6 months. Oh, it's 375, so this gets kind of hard.
We're giving them 12,870.
Oh, yeah, so we're gonna add the 12.5 that we're paying on the note, the payment plus 375, right, you guys? There we go, excellent. 12,875. These are the things that are gonna, these are the entries that are gonna make a difference between an A and a B plus, okay? So really, you can get to the B plus without doing these tough ones, but you're not gonna hit an A minus or an A. One more thing, this journal entry does not balance, does it? Is that what you're gonna say? We're out of balance. What do we need? What's the difference? It's 1 more month's interest, which is what? 62, is it? 62.50. Okay. Right? Does that journal entry now balance? Yes. And this is more interest, but it's interest what? Expense. What interest for what? January, 1 month. Right? Take your 375 and divide it by 6, and what do you get? 1 month, 62.50. Got it? You guys picked up on that, huh? Okay, good. When you see it, it's nice. It's back here first. Right? Yeah.
Why did you do 2 different interests?
Why did I do these 2 different entries? Because I'm doing a financial statement at December 31st, and I haven't paid out the money until January 31st. At December 31st, I want to show all the interest expense for that year, right? And so I have to show the payable because I indeed owe it to them at the end of the year. The next year, in January, I actually make the payment, so I have to record the journal entry. Got it? So, good, great question. Yes?
So, well, going back to G, it says, why don't we do the same entry for, because if we still pay the note, like, the 6 after 6 months.
Okay, why don't I need to do that? Yeah, on G, because I'm not doing monthly financial statements. If I was, I'd have to be doing a debit interest expense and credit interest payable every month and building
So
it
the
up.
one that you just did was just for that month.
Yeah, because we made a payment.
Okay.
When we make the payment, we have to make an entry, don't we? Otherwise, we only make entries when we do financial statements. Okay? No need to, for not doing a financial statement. That's kind of hard to get straight to, right? That's not something you really have to remember. You just look at it, okay, we're doing a statement, what do we need to record? Okay?
I have a question with calculating the interest expense. Can you pull down real quick to it? So if you borrowed the 25,000 in whole, why would you not have to pay 11/12 interest on that? Because when you pay off the 6-month period, don't you pay a lower interest rate than when you would have?
No, you pay the same interest rate. It'd be the same 6%, you just owe them less money.
Okay.
You're always, when you buy a car, right, or you buy a house or something, each one of your payments, part of it is for principal and part of it is for interest. Part of it's reducing the note, it's the principal, and the interest is the interest. So the reason it takes 30 years to pay for a house is because almost all your payment is interest, very little is principal. But each year, or each payment rather, each monthly payment, your principal is going down. So the next payment, there's a little less interest and a little more principal paid, right? And then it keeps going and going and going. So as you pay down the debt, you have less interest. Make sense? Yeah. I'm not going to pay you any interest on money I don't owe you, right? That's the idea. Okay, good. That's excellent. Okay, so let's do N. You can't wait 2 more minutes? 5 more minutes?
Stop.
Yeah. Yeah, you want to wait for this one. You're getting this stuff, I know. So, seeing as you're here anyway. Let's do N, you guys. Okay, this is also December 31st. What do we want to do? Do we need an entry relating to the equipment? Well, yeah. You need an entry. By the way, for this in M, the part that's circled here is the answer, right, guys? The other one's January 31st. You didn't have to do that. That's just showing you, right, what would happen next month. Okay, December 31st. Do we need an entry on the equipment? Yeah, you need to depreciate it. What's your journal entry going to be for depreciation? Debit what? Depreciation expense. Absolutely. Because we're depreciating it. We're using it up. Credit? Accumulated depreciation, that contra account. So the hard thing here is how much? So what do you want to do? What do we buy? Equipment. Equipment that cost me how much? $35,000. And what's the deal? Life is 6 years. Salvage value is $2,000. Everybody agree? And we're going to use straight line depreciation, which means the same amount every year. Yes, ma'am.
Did you make the SP 60,000? No, sorry.
No, it's in the problem on the first one. It is there, right? I got it right? Okay, I picked it right now. All right, yeah. I never make any, I kid. When do we buy this asset? January 31st. You know what most people do? They give me a full year's depreciation. Are you going to do that? No, it's 11 months, right? So that made it hard, right? So I could always throw things in to trick you. And it's not a trick. It's just, you know, it's what it is. 11 months. So let's try it. $35,000 asset, 2,000 salvage. Here we go. Cost is how much? $35,000. Salvage value or residual value? 2,000. The amount we're going to depreciate, we'll call it a depreciable value. Why not? What do you have added? 33,000. The life? 6 years. Divide it in, and what do you get? 5,500. And almost everybody that knows what they're doing will give me 5,500 per year on a problem like this. And they'll make their journal entry for 5,500, but that's wrong, isn't it? Why?
It's 11 months.
It's 11 months. Take 11, 12, 7. Right? That's it. The next year will be 5,500, and every year thereafter, till the last year, we'll only have 1 month left. Got it? So how much is that? 5041. Yeah, so good enough. Okay, read around. In real life, we use the pennies because the computer doesn't care, right? 5042. I don't think the computer notices the pennies. Got it, or 5043, something. All of a sudden, that's easy, then. If you read carefully, pay attention. Okay. Nice little quiz, huh? You can leave that. That was worth a couple minutes. Good grief, we're slow, huh? What time it is? You want to do something for the first quiz? 2 minutes we got left. We've been going a while, right? Hour and 20 minutes. Yeah, that's good. This is probably a good use of your time, you guys. Isn't it cool, though? Think about this. Think about how much you just got out of this last hour and 20 minutes of your life compared to what you get out of every class we do. Why are you getting so much more now? Because you are prepared for the meeting. You've read the material. You've worked on it. You've listened to me talk about it. You've talked about it amongst yourselves. You've done a bunch of problems. And now you're really close to really understanding extremely well. And now you come and see your boss, me, right? And you say, I don't understand this piece, this piece, this piece. And boom, now you know everything. Isn't that cool? Do that in all your classes. You got to really work. Really going to work, right? Always remember, you're going to put in all the time anyway. Do it up front. Do it up front, do it up front, do it up front. And I'm better at saying that than I am at doing it. I end up going to meetings all the time where I'm half-assed. I have to apologize. You know. I really didn't have time. Yeah, I played with the grandkids. I didn't have time. Right? Yeah, it's all right. I went to dinner with my wife. Waste time. Yeah. Anyway. I record this stuff too, like this was never right here. Okay. Are we really stopping? You don't want to do any more, or you have something to say?
I gotta get home.
Yeah, I can see it. That's all right. You guys want to do anything else? Anything for the first quiz that would be helpful? I don't care. No? Enough? Brain dead?
Kind of went over it in class.
We could take a break. Yeah, we went over a few things in class. All of a sudden, that first quiz was really easy. I'd go back and do them again before the test, right? I don't know if I do them for this quiz, because, you know, it's the same stuff anyway. But maybe for the test, glance through. Oh, problem 4.2 would be, I should have said that. Well, yeah, I'm saying it. I guess people watch this. That the comprehensive problem 4-2 and 4-1, those would be really, really good to do. That'd be really good to do.
4241.
Yeah. Comprehensive problem 4.1 and comprehensive problem 4.2. And the answers are out there. What they do is they have you do a whole bunch of source journal entries, transactions. Then they have you do the adjusting journal entries. And then they have you do a balance sheet and an income statement, right? And I don't don't do the cash flow statement as asked for it, don't do that. But an income, balance sheet income statement, and then they have your closing books. It's the whole cycle. And then you're gonna start again. Really good thing to do, so you can make sure you've got the whole picture, okay? Because we don't do that stuff in class. All of it. There's obviously pieces of it. Okay? See? Thanks for coming. Thanks for taking the time, okay?
We have a study session Monday and Wednesday.
Oh, God, do I really? Monday is for the test?
There's a quiz, I think, and then Wednesday's for the test.
Oh, this one's extra, wasn't it?
Yeah, this
Yeah.
one was
Ah, you guys. Okay, it snows killing me. Okay, Monday,
You
anything
don't,
else
you
done?
don't have to.
No, Monday we're doing one for the quiz, aren't we? No, that's okay.
Yeah.
Monday we're doing one for a quiz.
Yeah.
If we only do an hour, that's okay, right? If you guys are ready, come if you can make it. We'll do whatever we do. That's at 3, right?
3 to 5.
And then the other one will be going over that quiz. Yeah, your quiz. Yeah, so I guess so.
So are they both 3 to 5, or what is the first one 3 to 4, the second 3 to 5?
Yeah, probably more like that.
Okay.
Yeah. Whenever we get done on the first one.
Okay.
But we just kind of did the review for the quiz today, didn't we? So, but I did answer all your questions you had.
Yeah.
That's how we originally did this, wasn't it?
Yeah, just like the last few, and then, J, I didn't know if I did it right or not, I just want to make sure I did.
J is debit salary expense 250 and credit cash 250, because they actually did work and you paid them, versus in I.
Or I was talking about J, the, like, counting office supplies. I just want to make sure.
Oh, you're talking about 3 to 4 quiz.
Yeah.
Oh, okay, and we just did those. I think you
Oh,
meant the
no,
first
this one, no, it was just, 9 and 10, we went over each
one.
class.
All right, good. All right,
Good.
cool. Good. Everybody told you accounting was hard. Now you know how easy it is. Like that.